Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, October 16th, 2019, and we again find ourselves in the final hour of the market. I mention this each day, but during the day, the algorithms and the day traders are battling it out, and in the last hour of the market, and more specifically as getting close to the close of the day, the large financial institutions, the market makers, take over control of the pricing from the algorithms and the day traders with their buying power and selling power, and they move the price to what, in my opinion, is the most valid price of the day. So that is why I am an end of day trader. I like to wait to as close as possible to the closing price to make my buying and selling decisions from. So hope everyone is doing well today. Currently we are pretty dull day today. The Dow's up 3 points. The NASDAQ is down 23.7 and the S&P is down 4 points. So we've kind of been all over the place today. But I do appreciate everybody coming out today and listening to the podcast or the live stream, whatever we want to call this. And I hope that it's helping you with your trading and your investing. And I really appreciate you spending your time, investing your time with me each day. And I hope it's paying off with some kind of dividend as far as your trading or investing. So anyway, I just want to make sure everybody can hear me and that we're coming through loud and clear. So if you can hear me okay, if you wouldn't mind saying hi in the chat, and that way I'll know we're good to go. Aha, there's JT. How you doing, JT? It's good to see you, sir. Hope you're doing well, and appreciate you coming every day, JT. I really do. It's nice to see you. Hey, William, what's going on, buddy? That's our friend William from Hawaii. Tell Cooper hi for me. So, all right, well, it looks like we're coming through okay. Excuse me. So listen, the plan for today, as usual, first of all, we're going to go ahead and run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at all my current positions. We're going to talk about when I bought them, why I bought them, and most important, how I'm going to manage them either to the upside or to the downside. After that, we're going to come back. We're going to do a few minutes on trader psychology. Trader psychology, in my opinion, is the most important skill that you can have in trading. It's important to know the technicals, where to get in, where to get out, but whether or not you're going to follow that plan is going to come down to your emotions. So, think of managing your emotions as an actual skill that you get good at, because in the long run, in order for you to be a long-term successful trader, without a doubt, you are going to have to get your emotions under control, and you're going to have to follow your plan. It's the best way to trade, everybody, is to follow your plan, but it's those sneaky emotions that get in there and make us do things that we're not supposed to do. So I'm sure if you guys have been trading for a while, you understand exactly what I'm talking about. So I do like to talk about trader psychology each day, and I hope that by hearing it repetitively that you will internalize it and realize how important it is. So after that, we're going to go through my watch list. We're going to go through each stock one by one. We're going to look for different indicators. As you know, I look at different technical indicators as potential groups of buyers. So when I see a moving average or I see a MACD crossover, I look at that as potential groups of buyers coming into the market. And if you want to go long a stock, if you want that stock to go up, obviously it's a supply and demand issue. You need more buyers than sellers. So if you want a stock to go up, you want to be in the group of as many buyers as possible. And if you get a combination or a confluence of indicators lining up, it's a pretty good, it's a pretty good idea, or not a good idea, but it's a pretty good bet that if you have lots of group of buyers coming in, if you have a lot of indicators lining up together, that means you're going to have a lot of buyers. Sorry, that was a little wordy, right? So anyway, I like to look for combination of signals. I like to look for or in other words, like to look for a combination of buyers coming into the market, because that way you'll have the best chance of having a winning trade. So we're going to go down through all the stocks in my watch list. We're going to look for those combinations or confluence of signals. And as we go down through, I'll check a few of the candidates in the watch list, and then at the end of the day we'll go through all those candidates with a little finer tooth comb, and we will decide whether or not or I will decide whether or not I want to take a position in any of those. And if there's nothing there, we won't take anything. You know, you don't need to trade every day. You don't need to have a new position every day, right? Only if they're good, only if they line up. So, and then after that, after the market closes, if you have any questions whatsoever about anything I discussed today, please let me know. I'm happy to clarify it. If you'd like me to take a look at any stocks, just type the symbols into the chat and I will take a look at those. And then also, if anybody out there feels like there's a good possible setup before the end of the day, before the market closes, and you want me to take a look at it, if you think it'd be helpful for the group, please just put it in the chat, maybe put some stars by it or asterisk by it so I know it's kind of a time sensitive one. So that is the plan. So, all right, well, listen, hang tight, and I'm gonna play the US legal disclaimer, and I will be back in about 40 seconds.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right. Hey, Kirk's here. Good to see you, Kurt. Hey, look forward to our final lesson tonight. Kurt and I have been on a roll with this 5 lessons, and so tonight is his final lesson. So anyway, Kurt's been a really great student, and looking forward to the call tonight, Kurt. So I'll talk to you in a few hours. Jesse, how you doing, Jesse? Good to see you. Good to see you, my friend. Jesse was also a student of mine. He just had his final lesson on Sunday, right? It was on Sunday. So both Kurt and Jesse doing really great, and have no doubt if they follow, you know, what we discuss, that they're going to be successful. Hey, John, how you doing? Good to see you, sir. Thank you so much for coming by. Marco, hey, buddy. What's going on? It's good to see you, sir. Marcus says, hi, Greg. Podcast was great. Oh, thank you. Oh, the podcast, the Alpha Mind podcast. Oh, good. Thank you. Thank you so much. Yeah, I was interviewed on Alpha Mind podcast. So I actually uploaded a recording of that, or a video of that, on my YouTube channel. So if you guys want to check that out, I just talk a little bit about, you know, how I got into trading, some of the challenges I had, and so forth. So if you're interested in that, it's on my YouTube channel. JT says, what's the largest number of stocks have you ever held in a single time in your trading career? That's a good question. You know, generally, JT, you know, because I usually don't have more than 60% of my capital at work, and then I don't, you know, I have 10% maximum. I probably seven or 8 generally. You know, if I have some stocks with a half position, some with a full position, yeah, 7 or 8. Yeah, I mean, right now, you know, with what I have, it's probably more than I've had in a while. But I think 6, for some reason, 6 or 7 is probably the right number. Hey, Anthony, good to see you, my friend. Hope you're doing well. Anthony's another previous client of mine, and he did really great in his lessons as well. So thank you for coming, Anthony. Hope everything's going well. Santiago, hey, how you doing? Haven't seen you for a while. Hi, Greg, back from Barcelona. Thanks for sharing your knowledge. Oh, you are certainly welcome, my friend, and hope you had a good trip to Spain. It's good to see you. Sampors, hey, how you doing? Sampur says, hi, Nike and UAL. All right, we will look at those after the market closes. Kirk says, looking forward to it as well. Thanks, Anthony. Kurt gets his diploma. That's right. John Cortez, hi, Greg. Enjoy the podcast. Oh, good, John. Thank you. I appreciate that. And thank you for coming back. I really do appreciate that. Kirk says, LOL, I'm excited to see a Gossett grad, Anthony. Yeah. Well, I hope by the time you guys graduate, I hope you have a better concept of how the market works and how to approach the market, how to look at the market. Anthony says, the benefits are endless, right, Jesse? Thanks, man. Appreciate that, Anthony. All right, well, let's get to it. So first on deck is Amazon. I did buy Amazon back here on the 14th of October. I bought it because we had this higher low V1. Here is day one, here is day two. Day two washes out day one, closes above day one. It's a higher low close than the previous, rejected the 1 ATR channel. MACD went positive. So this was a great trade. We've been in it 2 days. You can see I think we hit 2 profit targets yesterday, maybe 3. No, I think it was 2. Now I can't remember. And then we hit 1 today as well. I tell you though, when I buy down here, I want to see whether or not it's going to hold the 50 RSI. If it rejects the 50 RSI, I'm going to go ahead and get out. If it holds above, I'm going to stay in, which is what I did. But here we hit 1 profit target today at 1781.65. But you see right now how we have rejected the 50-day moving average. So I key off of the 50 RSI, and then if it keeps moving up and rejects the 50, I will also take it off as well. So today on Amazon, if we close below the 50-day moving average, which is 1780.39, I will go ahead and just lock in this profit. But this has been great. I mean, from entry to where we are now, it's been a 2.3% gain in a couple days. So I'll be watching this here closely at the end of the day. If we move back above the 200-day moving average, I would also consider entering a new position there, right? I've phased out up to here, and it seems counterintuitive that if it gets above the 200, then I would add again at higher prices, but I would just use that as my initial stop going forward, because a close under and a close back over the 200-day moving average makes sense on Amazon from a back testing perspective. All right, IWM. Russell 2000. So I did buy the Russell 2000 here yesterday on the 15th of October. I bought it when it closed back above the 200-day moving average, similar to what I just showed you on Amazon, that I would buy it if it closed up above the 200-day moving average. I like this trade because it gave me a good risk to reward to close back under the 200-day if I was wrong. And some good potential to the upside if I am right. So it made sense from you can see, if we're wrong small on the 200. If for some reason we start trending back up, the risk to reward is fantastic. So anyway, we were higher today, much higher. As long as it stays above the 200-day moving average of 151.29, I will continue to hold this. It is holding, so that's the plan. Close under even a penny, I will get out of Russell. Normally I don't just buy a break back over the 200-day on Russell because it doesn't back test all that well. But the reason I did kind of override that and take the trade yesterday was that MACD went positive. So again, MACD is another indicator. I view this as another group of buyers. So, I had 2 signals here. I've had MACD crossover and a close back above the 200 with a good risk to reward ratio. So we shall see how this turns out at the end of the day. But if it closes under 200, I am out. MasterCard. So I did buy MasterCard back on the 14th of October. I bought it because we had a 1050 EMA crossover on a closing basis. This is a good back-tested approach to trading MasterCard on a long-term basis, getting in the trade when the 10 crosses over the 50, staying in it until the 10 crosses under the 50. I use this crossover, I use this 1050 crossover as an entry. I'm not going to trade this just mechanically, but I'm using it as my entry. So, yesterday we hit one profit target, which was good. As my students will know, once we start moving one ATR away from my entry, then I will start using some kind of trailing stop. But at this point, it hasn't gone high enough for me to initiate a trailing stop. So currently, right now, as long as the 10 stays above the 50, I will stay in this trade. If we start moving up, getting extended away from my entry, I will institute a trailing stop of some kind, whether it's closed below the previous day's low or some kind of, volatile action to the downside, V1, V2, something like that. To the downside. But anyway, so far so good. Glad we got that profit target yesterday, and today it is slightly down. So nothing really here on MasterCard. All right. The Qs. I did buy the Qs back here on the 11th of October. This is a completely mechanical trade for me. I bought it when the 5 EMA crossed over the 20 EMA. This is also a good back-tested long-term approach to trading the Qs. I bought it here at 191.11. The next day it just moved sideways. Yesterday we hit 2 profit targets, so I did phase out, took some chips off the table, locked in some profits. So this is completely mechanical, unlike MasterCard, where I just used the crossover as the entry. But as long as this keeps moving up, I will continue to phase out until I am out of shares. To the downside, if the 5 crosses under the 20 EMA, that will be my stop. I like to have discretionary trades. I like to have mechanical trades. Sometimes you'll be in a discretionary trade. You'll have 1 or 2 bad days that will get you out, and then it'll turn right back around, and you really won't have any place to get back in. So that's why I do like to have a variety of trading methodologies. So Qs, come hell or high water, I will stay in this as long as the 5 is above the 20, and I'll phase out to the upside. If the 5 crosses below the 20, I will get out. And the reason I like to do this on these strictly mechanicals on the Qs is because they don't have earnings. If you use a long-term crossover approach with the stock, you're going to have to hold through earnings. So anyway, down a little bit today, but again, we did take profits yesterday, took some off the table. If it goes down, the market can't take that away from us. We locked in some profits at a profitable level, so if it does go down, our loss will be less, obviously, because we locked in. So we'll just see where the Qs take us. All right, and lastly, the world famous overnight SPY trade. So I know you guys hear this every day, but in case we have some new listeners, I do want to lay out why I took that trade. But this is based upon a back study from Lizanne Saunders at Bespoke Invest on Twitter. With this study, there were 2 approaches. The first approach was buying the SPY. This is the SPY, S&P 500 ETF tracking, buying the SPY each day at the open and selling it at the close. So you'd buy in the open, sell at the close, buy at the open, sell in the close. If you did this every day since 1993, you would have actually returned a negative 13.9% for all your troubles. However, if you did the opposite, which is what I do every day, and buy the SPY at the close and sell it the next morning, so every day, buy at the close, sell the next morning, buy at the close, sell the next morning, you'd have actually returned a positive 634.2% from 1993 up till January 19th. And this number is higher now because this was back to 19. So that is why I do this. Past performance is no guarantee of future results, and that goes for any trading system out there. There's no trading system that wins 100% of the time. There's no trading system that doesn't have drawdowns. And this chart here, the blue line is the buy in the afternoon, sell in the morning. You can see over the long term, this approach has an edge. It's played out, since 1993, there's been drawdowns. These are completely normal. Doesn't mean the approach is bad. It just means that at that moment, the approach was not in phase with the market. But when you have an approach that has good back-tested long-term results, you have to do it for the long term in order for this to play out. I love this chart because it does show that how the edge plays out over time, even though you have ups and downs in the middle. So it's always important to position size correctly. Don't take too large of position sizes, because you might just quit using this approach, even though in the long run it's a good approach. So anyway, really interesting. This really means, guys, from 1993 to present, that all the gains in the stock market have come in the after hours and the pre-market session. They have not come intraday. So anyway, I find that really fascinating, that all the gains from 1993 have come from people bidding it up after hours and then also in the morning pre-market. So with that being said, let's take a look here. With that being said, I did buy the SPY yesterday at the close at 298.88, and this morning it opened up a little lower, 298.40. So it took a small loss, took about a 40 cent loss overnight, but that's how it goes. You know, sometimes you're gonna take 5 of these overnight trades and lose 5 in a row. During May, I lost probably 80% of my overnight SPY trades. However, if you look at it in the bigger term, I've been using this since February 26th, and it's been extremely, extremely profitable. And it's a very simple approach. You know, I use 10% position size, no more, because just like I showed you on that chart, in the long run, this has shown to be profitable. Going forward, who knows, right? We never know. But in order to let that profit play out, you have to stay in, play the long game. So anyway, small loss overnight on the SPY. I will be buying this again today at the end of the market, and then I will sell it first thing tomorrow morning. All righty. Jesse says 520 across on Goldman Sachs, and nice RSI, positive MACD cross upper value zone. Yeah, I definitely saw that earlier today, Jesse. So good analysis. Yeah, it's, you know, you definitely could take that trade. I don't think I'm going to, because I have MasterCard already, and they're both kind of in the finance business. And it's, you know, for me, it's really important not to have too many correlated positions. But, you know, if I didn't have MasterCard, I definitely would be looking at Goldman Sachs today. Hey, Steve Burns, good to see you, sir. Steve says that really proves the alpha happens overnight in the futures market. Yeah, I mean, there is an edge in holding overnight, everybody. I know it sounds dangerous holding overnight, but if you look at the statistics, you're better. You know, a person, if you look at the statistics over time, you'll see that that's really where the gain comes from, not the risk. The risk really comes during the day, if you look at it that way, right? So good to see you, Steve. Hope everything's going well. Thank you for coming. It's always an honor to have you here. I'm always excited to have you here, and I know everyone else is. Hey, Bing He, how you doing? Good to see you, sir. Nice to see you. Bing He's our friend from Singapore. All right. So listen, this is the time of the day that I like to do a few minutes on trader psychology. You know, there's a lot of good Twitter channels out there that post every day, good trading words of wisdoms, things that you should read and internalize. And Akil Stokes is one of those people. He has a great channel. If you haven't subscribed to him, at Akil Stokes RTM on Twitter, but he posts really good stuff, and it's, you know, it's about the mental part of trading. And so if you haven't subscribed to him, I really would suggest that you do. But here Akil says, how many times has your previous trade influenced your next one? By influence, I mean caused you to take one you weren't supposed to, stay out of the ones that you were supposed to be in, take profits early, move stocks back, right? And he is quoting Dennis Schull here. The old feelings from previous trade, from the previous trade, are like static, and you can't connect to what's happening in the market now. So, you know, Boeing is something I want to look at today, but my last trade on Boeing was a loser. And I don't know about you guys, but when I have a losing trade, whether it's off the 200 or some kind of V1, V2, there's that part of you that goes, oh, it didn't work last time. I don't want to get beat up again on the same trade, but it's the wrong way to think about it. You know, if you have a valid signal, and in your previous trade, you had a valid signal and it was a loser. I understand it's human nature. I understand you don't want to take the trade again, but it's really something that if you have another valid signal, even though you had a previous loser, you really should take it. You really should take it. So, you know, stick to your plan. If you have the signal, take it, even if the previous trade was a loser, even if the previous 2 trades or 3 trades were a loser. But, you know, Dennis Scholl here says the old feelings from the previous trade are like static and you can't connect to what's happening now. Yeah, it changes your perception, and you don't really want to take that trade, right? Because the previous trade was a loser. So keep that in mind, you know, be aware of it. If you've had a losing trade and then you have another setup, and I know you don't want to take it, but if it's valid, go ahead and take it. Again, it comes back to emotions, right? It comes back to mind games that you play with yourself. So thank you very much, Akil. Great post. And thanks for all you do. All right. How are we doing? 126. All right. I'm going to take a quick look at Nike for Sampours. I mean, Nike is strong here. However, you know, you can see it's up to the second ATR channel. I generally don't like to take trades over the 1 ATR channel because your easiest movement comes from, you know, in the channel or below the channel up to the 3rd ATR. Once you start getting up here, you know, 90% of trades tend to stall out around the 3rd ATR channel, kind of like it did here. So this is a little too high for me, Sampours, to buy. I really would need to have this move back into the value zone. You know, I look, when prices are above the 1 ATR channel, I look at them as overvalued, and I don't want to buy them overvalued. I want to buy them in value, in between the 1 and the -1 ATR channel, or under. I want to buy them at value or undervalued, but I consider anything up here overvalued. So I personally, for me, Sampours, on Nike, I would wait for a pullback. UAL. Well, really, the time, I wouldn't buy it here again. It's over the 1 ATR channel, right? It's over the 1 ATR channel. It's coming into some resistance at these previous highs. I would have to wait again for this to pull back into the value zone. This would have been the entry right here. I mean, I know this sounds obvious in hindsight, but here you had a nice V1 entry that closed back above the 200-day in the value zone. This is where I would have bought UAL, but now here, you know, I'm not saying it's not going to continue to go up. It's just the filters that I use, I would wait for a pullback into the value zone for me to get interested in this again. So I hope that helps. All right. Well, let's go down through our watch list here and see if there's anything interesting for today. All right, Apple. So Apple was actually down yesterday on that big day that we had. It did reject the 70 RSI, and it did reject the 3rd ATR channel. So it went over 70, under 70, over the 3rd ATR channel, under the 3rd ATR channel. When those happen at the same time, that's generally bearish. And it turns out that it was a bit bearish, wasn't it? Because we're down today. You know, nothing wrong with this chart. This chart is definitely still very healthy, intact, but we ran into resistance at the 70 RSI, like many times that we do, right? So for me to get interested in Apple, I want to be patient. I would like to see this come back down into the value zone and look for some kind of V1 or V2 to the upside. And it might just keep chugging along and I just won't have the trade, unfortunately, right? But you know, the way that I trade, again, it is, in my opinion now, it is overvalued, the way that I look at stocks and indicators. So I'd like to see this move back at least into the value zone. and look for some sideways movement, look for a V1 or V2 back up to test these previous highs. But right here, right now where it's at, it doesn't offer me a good risk to reward ratio. Look at Adobe today, down 2.66%. So big gap down on a lot of volume, did bounce off the lows, but in order for me to get interested in Adobe now at this point, I'd have to have the stock move back up, possibly close back over the 200-day. That would be one approach. Second approach would this to rally back up into the value zone, have ideally a couple days down, and then look for a higher low V1 or V2. Another way we could do this is a close under the 200, back over the 200. And the last way we could look at this would be look at a low RSI, 30 RSI under over kind of situation would be good as well. So nothing on Adobe today. AMD, very, very strong, is off of its highs. Nothing here for me. I mean, it's very strong. It's just outside the 1 ATR channel. So in other words, overvalued. You know, we've had this extended move up. Like with a lot of stocks today, I'm going to be saying I want this to pull back into the value zone, look for a V1 or V2. Though that is where I would get interested with advanced micro devices. Amazon, of course, we talked about that earlier. I did buy this back here on the 14th at 1736. Yesterday, we had that nice big move up. We hit some profit targets. Today, we also hit another profit target. But my plan with Amazon today is if it closes under the 50-day moving average, which it is right now, the 50-day moving average is 1780.38, and we are now at 1779. If it closes under the 50, I will just go ahead and lock in profits. If it had hit the 50 RSI and closed below, rejected the 50, I would have gotten out yesterday. But now I'm turning my attention to the 50-day moving average, and currently, today it did go above, and currently right now it is below. So if it closes below, I'll just go ahead and lock in the profit on this. All right. So earlier I was talking, you know, during the psychology section, I was talking about, even though your previous trade was a loser, if you have another setup, you know, you don't want to take it, but you really should. But I did buy Boeing here when we had this higher low V2, did hit one profit target, and then yesterday I had to get out of the trade. But here now we have a nice V1 entry today. Here's the low. We wash out the low. Earlier in the day, it was above day one's close. So I'm sorry, day one's close. Here's day one. Day two washes out, closes above. Excuse me, I did this wrong. I was looking at this as a V2, as here's day one, here's day two. Day two washes out day one. Day three closes above day one, but I just noticed, yes, we did go below. So this is actually a V1 to the upside. So this does look like it is actually going to confirm. However, it didn't wash this out very well. Yesterday washed out the previous days really well. I looked at this as a V2, but even though this V1 does look like it is going to trigger today, it wasn't that great of a washout, and currently we have lost the 50 RSI. So if we close above 373.18, then I would buy it. I would buy it because then it would put us above the 50-day, the 50 RSI, and it would be this weird kind of V1 V2 combination. You really can't have a V1 and a V2. This is the V1, but I would still consider this a valid V2 if we closed above Monday's close. So anyway, I will be watching this one, but the point of this was, you know, the last trade I had on this signal was a loser, but it doesn't mean that you should not take another approach, take another shot at it if you have another valid signal. So we'll see where this closes. Caterpillar, you know, I just talked about the third ATR channel, about how it gets rejected quite often. That's exactly where it got, looks like almost to the penny. So nothing here. We did break above the 200, which is positive yesterday, but it's just at too high of levels here. Dow Jones, just have an inside day today, so nothing too exciting one way or the other, nothing on Dow Jones. Walt Disney having a nice day today. You know, I've been watching Walt Disney for a while, and I've really been looking for a close under the 200, back over the 200 on a deep dip buy. Another way we could approach this is under 30, back over 30. That would be an excellent place to buy. You know, we made this prior low here with these deep MACD bars. Now we've rallied with some green MACD. If we can come back and test this previous low, which would then we would have a really nice double bottom with the bullish divergence, and it would happen right at the 200-day moving average. So this is a really sweet spot. Conversely, if we just keep moving up here, the 1050 crossover is also a good approach to trading Disney as well, a momentum crossover approach. But I would like to see this come down, test the 200 at the same time we have this double bottom with the divergence. So nothing there today. Etsy down today, rejected the 200-day moving average. I'd like to see this pull back into the value zone a little bit more, go sideways and look for a V1 or a V2. Ford tested the 200 above yesterday, didn't like it, currently underneath, so nothing on Ford today. Facebook up a little bit today, up $1. Oh, it's up more than, oh no, sorry, that's 5. Facebook up a little today, but looks like it's holding that 100-day moving average. Steve Burns had a great trade on this back here. He held it and has rode this baby all the way up. I watched his newsletter last night, his video newsletter. In case you guys don't know about that, newtraderu.com, that's Steve's website, and he does have a weekly newsletter where he goes over stocks in his watch list, gives his commentary on the stocks and the market, and he does that 3 times a week. But I'm a subscriber to that. I look forward to it, watch it every night, watched it last night. So I believe he mentioned he would be using the 100-day now as his trailing stop. So nothing for me on Facebook. 5 below. Boy, I guess I should have taken that trade. Was that nice V1 entry at the same time above the 200. I took something else that day instead, but this has really worked out nicely. But in order for me to get into Facebook, or sorry, 5 below, I would need a pullback into the value zone. GDX, this is the gold miners ETF. Nothing here today, but I do like that we have a low, we rallied, we made an equal to low, we had a bullish MACD divergence. That did work, it did go up. Now we've made a lower low, and we still, this is not halfway of this, so my students will know that that's not quite legit, but it seems like every time it's coming down, it is running out of momentum. So I would really be looking on GDX for some kind of under 30, back over 30, possibly a bounce off the 200-day moving average, but nothing there yet. And here is regular gold up today. I would be looking for a 520 EMA cross. Last 520 EMA cross I took was a loser, was a small loser, which is fine. But again, like I mentioned in the psychology section, just because that last one doesn't work doesn't mean, well, if it happens again, that I shouldn't take it, and I will take it if we have a 520 cross. Goldman Sachs, Google, nice today, up nicely, but over the value zone, need to pull back into value. Goldman Sachs, this is one that Jesse talked about. We have this nice V1 yesterday. If you guys remember, I did talk about this. We bounced off the 200. We washed out the previous day's low. We closed above the previous day's close. I would have taken this yesterday if I didn't have MasterCard, but today we have the 520 crossover, which does backtest well on Goldman Sachs. It really does. So, you know, if you look, well, I guess I'll show you that after, but the 520 crossover does does back test well. We also have positive MACD. The entry point is within the value zone, which is good. The RSI is 54.78, so it is not extended, but it is showing positive momentum. So if I did not have MasterCard, I definitely would be taking Goldman Sachs today. No doubt about it based upon this 520 cross. But you know, it's important not to have too many correlated positions. That's a big thing for me. So I'm just going to pass on Goldman Sachs, but only because I already have MasterCard. IBB did have that 520 cross. That does back test well as well. I just didn't like this 100-day moving average above. So on this, looking for a pullback, looking for a V1, V2. Intel, nice move up. You know, you can see the moving average separating from themselves, but I would like to see Intel come back into value, have a V1, V2. Russell, of course, we have this. I did buy this yesterday based upon the close over the 200-day and the MACD going positive. I'm going to have to watch this one closely at the end of the day. Close under 151.29, close under the 200-day. That will be my exit point. But again, this is a good example of having a lot of potential upside potential with a very small loss if I'm wrong. You know, I bought this barely above the 200-day. So any close below the 200-day, I test the market, you know, invest some money in it, accept the small loss if I'm wrong for the potential of having a big win if I'm right. And that, guys, is the key to successful trading, is putting yourself in a position to have big wins but small losses. Makes sense, right? But a lot of people don't do that. So as long as it holds above 151.29, I will stay in. Johnson & Johnson, big move up today, too high over the 1 ATR channel, so not a good risk to reward. Again, pull back into value, look for a V1, V2 would be the most likely trade. Coca-Cola could trigger a V1 today. Yesterday is day one. Today we washed out day one. This would have to close above day one's close, so it would have to close about up here today, exactly where it found resistance earlier in the day. So we can mark that. So look, I mean, here we have a V1. We have a higher low V1. I don't like this big old bar a few days ago. I don't like this huge reversal bar. You know, when you have these big bars larger than 1 ATRs, you might rally back to about 50%, and it looks like yesterday almost exactly where it got, almost exactly 50%. So yeah, it does look like it's a valid V1. It did reject the negative 1 ATR. It looks like it's closing above the 50, which is good. It's a 49.05, and it still has these major moving averages above us, and you have this big volatile down bar. So taking this all into consideration, I don't like it. MasterCard, of course, we bought that with the 1050 crossover, hit one profit target yesterday, went down much lower earlier today, but has rebounded, so that's good. So on MasterCard, as long as, you know, if we can get 1 ATR channel or 1 ATR distance away from my entry, I will institute a trailing stop. But right now it hadn't quite got there. So going forward, I will keep this stock unless it moves up 1 ATR for my entry, and then I will use a trailing stop, or conversely, waiting for the 10 to cross back below the 50. Altria, big strong, but just too high up there. Merck has just been a hot mess, just going sideways here, nothing on Merck. Microsoft had that big move up yesterday, and then we gapped down. We're down today. Like with a lot of stocks, I'm looking for this to come back into the value zone, look for a V1, V2. You know, these moves up were strong. Coming back down is totally normal. Doesn't mean anything's wrong with the stock. It's just some people taking profit targets, right? Hitting profit targets, taking some profits, but looking for a pullback. You know the saying, right? Buy the dip. Netflix up today. We have earnings after the bell on Netflix. So even if I had the most perfect setup in the world today, I could not take this because of earnings. Very important not to gamble through earnings. We've had this big move up. Even if they have great earnings, stock may go down. People may have already been pricing in good earnings, and that's why it's moved up. So, I know with new traders, they'll see a stock that had great earnings and the stock will go down. They're like, how is that possible? Well, that's because the people have already priced in good earnings, and it's a buy the rumor, sell the fact. When the fact actually comes out, people go, okay, well, that's it, and they sell. So it's very important not to gamble in front of earnings. If you want to gamble, go to Las Vegas, get some free drinks and go to a show, get a free room, all that kind of stuff. But unfortunately, gambling in the markets, you get nothing, not even a free coupon for a water, right? So if you seriously want to gamble, go to Las Vegas and get something, have somebody give you some free drink or food for gambling at their place. But there is no such thing in the market, and gambling in front of earnings, or taking a trade in front of earnings, really is gambling. Nike, we talked about that earlier. Yeah, it is strong. It is moving up, but again, the way I trade, I need a pullback here before I would get interested. Philip Morris, we had this sideways move, and then we finally broke out today over the 200-day moving average. So Philip Morris has really rallied off the bottom, but I can't buy it up here. It's too high. It's way above the 1 ATR channel. It's right at the second ATR channel with the third right here. So nothing on Philip Morris. PayPal, nothing on PayPal today. We were low here. Now we've rallied into the value zone. I'd look for a day or two pullback and then look for a higher low V1 or V2. We actually did buy it here back on the October 10th with a close under the 250 and back over the 250. Next day we had a monster day. We hit 3 profit targets. We went above the 50 RSI in that day and closed below. So I did exit this trade here, but we did have the nice profit targets all the way up here. So on PayPal, I look for a higher low V1, V2. Alternatively, another close under the 250 and back over the 250. Or alternatively, if it doesn't hold the 250, look for some kind of under 30 RSI, under 30 over 30. Qs we bought the 520 crossover. We've taken some profits already. Total mechanical trade, so I'm not going to initiate any kind of trailing stop in this. I'll just hold it as long as the price stays, the 5 stays over the 20. If it closes under, I will go ahead and get out. If it keeps moving up, I'll phase out till I'm out of shares. SPY, of course, we had small loss overnight on the SPY. Not doing too much today. I will be buying this today at the end of the market, selling it first thing in the morning. Bonds have really gotten beat up here, closed below the 1 ATR channel. I would be looking possibly for a deep dip buy here down to the 100-day moving average, because if we do that at the same time, we'll likely have close to a 30 RSI, which is a really good, confluence of signals when you have those at the same time. Conversely, if we move up into the value zone and then have a day or two pull back, look for a higher low V1 or V2. Tesla, very, very strong. Close above the 200 a couple days ago. Has acted as support, but again, in the context of this chart, we're above the 1 ATR channel. We're at the second ATR channel. It's just too high for me to buy. I'd have to be patient, wait for a dip back down into the value zone. Twitter, not doing much today. The sweet spot on Twitter for me would be a close under 30 or intraday under 30 and back over. That's what I would be looking for on Twitter, but nothing there today. UNH had that big, strong move up. I think it was Murray that it was Murray or Johnny. I think it was Murray that had UNH. They had earnings. So it had a huge earnings day. You notice the big bar that we have here? Do you notice how today we actually came down, tested the halfway of that bar and closed above? So that's good. It's good that we are currently holding halfway of that bar from a Fibonacci standpoint. So nothing here. It's way too high for me. Doesn't mean it can't keep moving up, but it's just too high at the third ATR channel. Again, I need to pull back into value. Oil. Nothing really here on oil. Nothing really here. VIX, we're to 37. What's all this? Uh-oh, what happened? Oh, good. All right, VIX. You know, I am watching VIX pretty carefully here. We have this low with this deep MACD bars here. Then we have a rally. Now we've come back down. We've made a lower low, but the MACD bars are not as deep as the first. I really would be looking to buy VIX if we could get down into this area, under 30 back over. Ideally, if you had an under 30 back over 30 and an under the 30 ATR channel back over 30 ATR channel. So right here, in my opinion, would be a sweet spot on VIX. So I'm going to be watching that pretty carefully. Verizon, you know, this is a really good example here of a double top with the bearish divergence. Here we have this top. You can see, even though the MACD bars don't line up with this top, the highest readings were back here. So I want to look at this top. I want to look at the highest readings. So, you know, we come up here, we make this high, we do pull back, MACD goes negative. Yesterday we broke out to a new high, but you see how there were no even green bars at the time. So now we have a double top with a bearish divergence, even though we painted a little green today. See how short this is compared to how tall it is over here. This means it's running out of momentum. So am I going to short this? No, I'm not going to short it, but you know, in the big context of this chart, we do have a double top sell off higher with a bearish MACD divergence, and yesterday was a false breakout to the upside. I mean, we broke out into a new range, and currently right now we are under. So this is a double top with a false breakout to the downside. So I'm not going to short this, but this is the kind of setup I would if I was shorting. Walmart is another example of a double top with a bearish divergence. Here we have this high on this move. This is how high the MACD bars were. We sold off. We made a higher high. Look at the MACD bars here. Hardly nothing compared to over here. And was it a false break? Was it a false breakout to the upside? It was. We broke out to the upside. Next day we closed right back into the range. So it's a false breakout with a double top with a bearish divergence. So this looks pretty shorty as well. I'm not going to take it because we're back in the value zone. If this whole setup happened up here, then it would give me some more room down to the value zone as potential profits. But it's in the value zone now. If I'm going to short, I really want to short way up high to give me some profit back into the value zone. But now we're already in the profit zone. Energy, you know, this would be a really nice V2 tomorrow. See, here's day one. Today is day two. Day two washes out day one. Tomorrow, if we could close above day one's close, back in the value zone, with a higher low, it would be fantastic. So nothing today, but something to, you know, possibly look at tomorrow, because here's day one. Day two is today. Washes out day one. If tomorrow closes above day one's close, back in the value zone, also with the washout bar having a rejection of the 1 ATR channel, that would be good. So that's what I'll be looking for, but nothing today. How we doing? Oh, 6 minutes. Financials, XLF, doing great. Inside bar, nothing there. Real estate, nothing. Utilities, nothing. V1, but it didn't happen in the value zone, and it didn't happen at a good RSI level. And then healthcare. So what does that leave us with today, potentially? Well, Coca-Cola has pretty nice V1 here. Rejection in the 1 ATR channel. It's not bad. We haven't had Coca-Cola for a long time. Just give me 1 second. Yeah, it's not bad. I mean, we moved sideways. We had a spike down. Boeing does not look like it's going to trigger. All right, let me clean shop here for a minute. All right, so quickly, Amazon does look like it's rejecting the 50, which I would take it off. 178. If it closes under, I will get out, so I'm going to have to watch that one carefully. IWM looks like it's holding over the 200, which is fine. MasterCard is fine. Q's and SPY. So I will be buying SPY at the end of the day. So really what this comes down to for me at the moment is possibly buying Coca-Cola. Let's see, the close was 53.51. Right now it's 53.55. Let's look at the weekly. I like the weekly. Nice strong move. On the weekly, we're back in the value zone. So from a weekly perspective, we're starting to get back in value. And then on the daily, we have the trigger. So let's take a look here. I think what I'm going to do, what do we have? 3 minutes. So this is going to be pretty close on Amazon. 1780.37. This does look like it's going to close under, although I can't quite be sure because the trading day is not over. Coca-Cola does look like so. All right, I'll tell you what. I'm going to go ahead and sell my Amazon. I'm going to have too much to do here all at once, so let me make sure. Yeah. I'm going to go ahead and lock in profits on Amazon. That was a really nice trade. Oh, boy. So Amazon's gone. Okay. And Coca-Cola. Been a while. What do we got? We've got 50. All right, IWM does look like it's holding. Ooh, now Coca-Cola, I don't know. Now it is under. So if it's under, I can't buy it. 53.51. Yeah, this one's going to be really close. 49. All right, so it closed under, so I did not buy Coca-Cola because it did not trigger the V1. So, all right, so we did hit one profit target on Amazon. It did close below the 50, so lock this profit in. That was a really nice trade. Nice 2-day trade. So Amazon is gone. Thank you, Amazon. IWM did close above the 200, so I'm continuing to hold. MasterCard still under the 1050 crossover, so I'm holding. Q's still under the 520 crossover, so I'm holding. And I did buy SPY. Where did I buy SPY at today? So that was my only position, 298.40. So the new, I don't know why that part's doing that. 298.40 is my new position on SPY. That's a bad tick coming in, so I'm turning off the live streaming and turning it back on. There we go. All right, so that's the only position I took today. Did get rid of Amazon. So like I said, just because it's a new day does not mean you have to take a new position, right? So anyway, down a little today, not too bad after that huge move up yesterday. So listen, so if you guys have any questions, you want me to look at any particular stocks, I'm happy to do that for you. So just type them in the chat. And before we do that, I just want to put my daily plug in real quick. Let everybody know that I do offer private one-on-one coaching, mentoring, and teaching lessons in the evening time. I really do like to teach. I've had really good success with my clients. You know, I put a lot into the lessons. I teach 5 2-hour live one-on-one lessons where I teach you everything I know. You know, what I do here in the podcast, I hope is helpful, but really the advantage of doing the one-on-one is that after I teach you, I put you on the spot and I have you teach it back to me, which is important. You know, it's easy to follow along and go, okay, that makes sense, that makes sense. But when you get put on the spot and then you have to teach it, it's a whole different thing, right? So, you know, once we're done with the lesson, once you can teach it back to me, then I know that you know it. So anyway, if you're interested, please let me know. You can reach out to me by email. My email's in the description of this video. You can also send me a message on Twitter. You know, even if you just want to kind of kick the tires and see what it's all about, you know, I do offer to anyone without any obligation, you know, 30, 40-minute Skype call where we talk about your trading, what challenges you're having, what your goals are, and see if we're a right fit for each other. And, you know, and if we are a right fit, sure, then we can go ahead and schedule the live lessons. But if not, then it's fun talking to you anyway, right? So, you know, if it's of interest, please reach out to me. I think it's a good investment. I think you'll get a good return on your investment by taking the lessons. So let me know, you know, if you're interested. And then finally, if you like today's podcast, if you're learning something, if it's improving your trading or your investing, please do me a favor, hit the thumbs up button. It helps YouTube promote the channel out to more people. And there are a lot of people out there that need help with their trading. I know that for a fact. So, you know, hopefully if we can get the message out to them and they can come here, hopefully it will help them with their trading, and you know, at the very least help them not lose as much money, because there's a lot of people that lose money in trading, guys, and they need some kind of format, they need some kind of context, they need some kind of plan, and that's what I try to provide. So again, if you don't mind, hit the thumbs up button, maybe share it on social media. I really would appreciate it. So okay, hey Mount Doji, what's going on, buddy? Good to see you. Back from Cabo. Hope you had a good vacation. Bing He says, Greg, can you take a look at DEN? Is the MACD histogram bullish divergence? I don't think so. However, using Bollinger Bands, it seems like a reversal trade. Okay. No, there is no bullish divergence here. I mean, what you're doing, Bing He, is you're looking at this low, and now we're lower, and you're saying these bars, I think, are not as deep as these bars, which is true, but there's no green bars in the middle. For it to be an actual bullish divergence, you have to have a low, then you have to have a rally, but the rally has to include green MACD bars before it comes back down. So no, there is no double bottom here or lower low with a bullish divergence. Seems like a reversal trade. Well, maybe. I mean, I can see that, you know, if we get down here to this third ATR channel and go under 30 RSI and back over, sure, that's where the reversal trade would come from. But I think down in this area is where the spot would be for some type of reversal. Doesn't mean it's going to reverse, but this is right down here is where I would look. So I hope that helps, Bing He. Steve says, I am enjoying the Facebook trade so far. I would imagine so. I would imagine so from here to here. That's a great trade. And it was up today. It was up today on a down day. So congratulations, Steve. That's good. And like, think from your weekly newsletter, video newsletter, I believe that close below the 100 was your stop. So fantastic trade. I think it's about, what, 6-7% trade at this point. Anthony says, isn't RSI high on Coke? Yes, it is a bit high. It is a bit high, Anthony. But this is one of those situations where, you know, even if we go up to the 50 RSI, I mean, let's take a look where the 50 RSI is going to be, up around in this range. So you have a potential profit from here to here, where your stop loss would have been halfway of this bar. So technically from here to here would be your stop loss and your profit up to the 50 here. So yeah, it is high, but because the stop is so close, it still gives you a 2-to-1 risk to reward. And you know, I know a lot of times, you know, you see me going, okay, if it's a 46, 47 RSI, I'm not going to take it, but it depends how far the stop loss is down. But you see, here's halfway of the washout bar. So you see from here to here, that would be your potential risk. And then from up to here, that's definitely more than 2-to-1. Now, I certainly would like it if it would have closed above these moving averages and above the 50, that would be even better. But I do like this sideways move, the rejection back over. But it didn't trigger today, so I didn't take it. JT says earnings on Friday, October 18th. Yeah. I mean, listen, it's okay to take a trade even if the earnings are a couple days out, because you might be getting that move into earnings. Right? I mean, if earnings are this afternoon, of course, you don't want to take it. If it's tomorrow, you can't take it if it's before the market. But, you know, yes, you can take a trade if you have a couple days towards earnings in anticipation of possibly the price moving up into earnings. But anyway, it's a moot point because we didn't take Coca-Cola now. Jesse said, for those with TOS, you can split dividends from price data in chart settings under equities tab, select all, adjust for dividends. Oh, I'm so glad to hear that, Jesse. So you were able to, you can adjust for dividends on TD Ameritrade's platform. That's fantastic. And Kurt, we should probably keep that in mind. You can split dividends. So you go to settings under equity, select. I'm actually going to take a quick screenshot of that, Jesse. Thank you. So I can share that with Kurt tonight. Awesome. Good to know. Yeah, I think it's better. I think it's better to have your charts, you know, adjusting for the dividends, split the dividends. Mountoji says, I'm about to listen to your Alpha Mind interview. Oh, good. I hope you like it. I hope you like it. What are your thoughts on the engulfing V1 candle on core? It's pretty sweet. That's pretty sweet, Mountoji. I mean, that is nice bullish engulfing candle. It's a beautiful V1 over the 20-day moving average, over the 5, over the 10. And Mount Doji, you see how we make this lower high? This is lower than here. So if we make a lower high, we have to wash out. See, we washed it out today. Yeah, I like that. Let's look at the weekly. Yeah, back in the value zone. That's good. On the monthly, we've had this nice uptrend. Really nice, good uptrend. One time frame below, we're back in the value zone. That's good. And yeah, I like this a lot. Did you take that, Mount Doji? Yeah, that's pretty sweet. Anthony says, Jesse is a big help with TOS. Yeah, I'm glad you guys kind of networked together there. You and Anthony and Jesse and Kurt helping each other out with setting up the charts for TD Ameritrade. Jesse says, for some reason it doesn't adjust ETFs. Huh. Don't know why that would be. Jesse, could you tell me what your chart says as far as what the reading is right now, like on the 200-day moving average on SPY? Mount Doji took the core position. Oh, that's good. I like that. Yeah, I mean, look at that. It's a V1. It looks like a V2, right? Here's day 1, day 2, day 3. Day 1, day 2 washed out day 1, day 3 closed above day 1, but actually it's a V1 because today washed out yesterday and then closed above today's close. So yeah, that's I really like that setup. You know, I mean, if I would have bought this today, I would use halfway of the washout bar. This would be the washout bar halfway. So for my entry to halfway, this is potential risk. And the potential rewards probably up in here. So it gives you a nice 2 to 3 times risk to reward on this. Jesse says 285.72. Yeah, you can see mine says 283.46. If I go in here and adjust for the dividends, Jesse, if I show prices unsplit, I bet we get the same number. Pretty close, 285.73. Yeah, so you're right, it didn't adjust for that. But again, guys, you know, if you can adjust for it, it's fine. Just use it consistently with what you have, because there's going to be times where if I get in on mine and yours you don't get in, and then I may have a loss where you didn't get in and don't have to take the loss. So Anthony says it's a problem because on IWM I had it reject both 100 and 200. I stayed with it because you did. Eventually I will have to fly the coop, and maybe I should stay with my charts for consistency. Yeah. Yes, Anthony. You do. You're exactly right, because of the consistency. You know, but I've spoke with Stephen Burns about this, and that is his solution, is you have to just stick with the charts that you do have. Interesting though that they would be so different. Yeah, Anthony, I definitely would, for consistency, go off of your charts, not what I'm doing, especially if we have different charts. You know what I mean? RGS had a golden cross today. Yeah, it did, which is good. But we know that's a long term. We know that's a long term crossover, right? Doesn't really affect what's going on today. But if you have a crossover, right? If you have a long term bullish crossover like the 520, and you also have a good signal on the daily, that's even better. Mount Doji did not take that position. Jesse said, for some reason, it won't split the equities within the ETF. I see. Yeah, guys, my advice is, use your charts. Use what you have. Be consistent. It will all, it'll all equal out in the end. But if I take a trade based upon my charts and it's not what you have, you got to be able to look at your charts and go off of your charts. But it's going to be the same. It's going to be the same. But just for consistency's sake, use your charts and what your readings are. All right. Oh, I wonder if Netflix had their earnings. So IBM had earnings. They fell. Holy smokes, guys. Netflix is up 9% after hours. Woohoo! Wow. That's awesome. That's a huge move. Huge. IBM is down 3%. So not such a good move. All right, so Mount Doji took COR today, which I really liked. Anybody else take any positions today? All right. Wow, 9% up for Netflix. Unbelievable. Yeah, I know it's tough when my charts say one thing and your guys' charts say the other, but again, right, you always have to rely on what your charts are doing, not my charts. All right. Well, listen, if you guys have any other questions, please let me know. Oh, JT says Roku in and out. Oh, yeah, I haven't looked at Roku for a while. Uh-huh. When did you get in, JT? Was it today? Or was it a couple days ago? JT's also in McDonald's. Did you get a McDonald's today, JT? Oh, today and sold today. Okay, on Roku, I think. Well, it looks like Roku had a move if you got it down here closer to the bottom, but it did reject the third ATR channel. So, you know, if I had been in this position, I would, don't know for sure, but I would give some consideration that it did reject the third ATR channel. All right. Okay, you got McDonald's today. All right, good. Well, had a V2. Here's day one. Day two washes out day one. Today closes above day one's close into the value zone. So nice. Nice, nice. It's nice that it showed that it stopped going down and reversed. All right, everybody. Well, listen, if you have any more questions, please let me know. But JT, thank you for sharing your positions and thank you for coming. Jesse, thank you, sir. And thanks for sharing that script with the guys for TD Ameritrade. And again, just one more time, you know, if my charts don't line up with your charts because of this dividend splitting thing, it doesn't mean mine are better than yours. It does not mean that at all. It just means we want to be consistent with the charts we have, with the levels that we have on our charts, right? But, you know, if you're basing something off of my chart and then managing off of your chart, it's not going to work. You know, I want you guys to make your own trades and, you know, make your decisions based upon your charts, right? So John, thank you very much. Appreciate you coming by. And Anthony, good seeing you. But yeah, please use, you know, please use the readings that you have, my friend, on your charts. All right, Mount Doji, thank you, my friend. And I like that trade you took in core. Thank you for coming back. Appreciate it. Kurt, looking forward to our call tonight. And we're going to be doing a lot of chart studying tonight. And I'm going to make you break down a lot of charts. So get ready, right? Bing He, thank you for coming by. Hope you have a nice day in Singapore. And Stephen Burns, thank you for coming, my friend. Appreciate it. Nice trades you got going. You're the master. And thanks for everything that you do. Sampors, good to see you. Nice to see you back. And let's see, John Cortez. Glad you like the podcast, John. Appreciate you coming back. Always good to see you. And Marco, good to see you. And if you ever have any questions, Marco, you let me know. And Santiago, nice to see you again. Thanks for coming back, and thanks. I hope you had a good vacation in Barcelona. And William, good seeing you, William. And yeah, we'll schedule that Skype call based upon that email, and we'll talk about that. And hopefully I can give you some good advice. All right. All right, everybody. Well, that is it for today. And thanks again, everybody, coming by. And go out and do something nice for somebody today. Hold the door open. Say hello. Give somebody a smile. Just do something nice for somebody. It's going to make their day, and it will have a positive effect on you as well. So thanks again. Hope to see you all tomorrow. Have a good rest of your day and be safe. All right? Take care. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.